Welcome back. Well, here come the tax increases targeting wealth. Progressive senators proposed a capital gains tax at death with an exemption at $1 million. This as President Biden looks to pass another spending bill with a $3 trillion price tag. This will rely on these tax increases and others to pay for it. Joining me right now is Macro Trends Advisors founding partner Mitch Roschelle. He is an expert on tax policy. Mitch, it's great to see you this morning. Thank you so much for being here. Let's walk through your expectations in terms of the tax increases coming. I've said many times, one of the things I think that will be incredibly impactful is the capital gains tax. That's going to impact people, and they're going to stop spending money because they're going to get hit with a huge tax bite if they sell their home, if they sell stocks. We're going to see a stock market sell off. If we see the capital gains tax go from 20% to close to 40%, what else is on the line, Mitch?
Well, let's look at what they're talking about right now, the basis step up, and let's look at the historical perspective of why it even exists. You have folks who own farms in their family for generations, and if the owner of the farm dies, now all of a sudden the heirs have to sell the farm, the thing that gives income and wealth to the family, just to pay the tax bill. So the basis step up, which they're looking at, eliminating, is the thing that really has preserved wealth in families for generations. Now the government wants to take it away.
Okay, so that's the tax at death. But, Mitch, you're also talking about payroll taxes, Social Security, a rollback tax, benefits passed through entities that small business gets hit, scale back estate tax exemptions. You're talking about the corporate rate going up from the current 21%. A lot of people talking about it. It's going to 28%. Of course, we know that under President Obama, it was all the way up at 35%. So walk us through who's going to get hit the hardest from all of these tax increase ideas.
I think it's really everybody, and I think it's a colossal lie to say that we're only taxing the rich. The fact of the matter is the rich do in fact pay the bulk of the taxes in America. But if we raise corporate taxes, we raise payroll taxes, we take away the benefit put forward by the Trump administration for small businesses on pass-through entities. All of these are going to trickle down to workers. It's going to trickle through the entire economy and stall whatever economic growth we have on the horizon. So the fact of the matter is when you say that you're just taxing the rich, you're actually taking away prosperity and you're taking away job creation, which has the impact of hurting basically every taxpayer.
Yeah, which is why I said earlier we need to get it right when we're talking about it. This is a tax on people making $200,000 or more, not $400,000. $400,000 is the number for families, Mitch. People need to understand their taxes are going up in the middle class. It's not just taxing the rich, even though I know that line plays really well with the populace. Mitch, final word real quick.
Yeah, and I think the other thing is the misconception around whether it's families or individuals. Even if we tax the top 5% of taxpayers in America who currently pay $900 billion of taxes, and we increase their taxes considerably, it's still not enough to pay for a $3 trillion infrastructure plan. So we can't tax our way to spend $3 trillion on infrastructure and whatever else will be in that measure.
And they know that. They're just trying to spin it like they're going to tax the rich and nobody else, which is just, it's disingenuous. We know that. Mitch, it's great to see you and get 100%. Your insights as always. Come back soon, Mitch. We miss you. Mitch Roschelle
joining
us this morning. Stay with us. We'll be right back.